Welcome back to the Investing Talk podcast, everyone. Today we're looking at Orchid Island Capital, ticker symbol ORC. It's been making some noise in the market. We've got earnings reports, technical analysis, and forecasts galore. You know, ORC has had a crazy year, but still managed to end 2024 in the green. Plus, they've got that monthly dividend, has income investors excited. But is it too good to be true? Let's see.
ORC hit a new 52-week high, closed at $8.35, January 31st, 2025.
Yeah, almost 4% gain in one day and almost 4 times the normal volume. Shows strong buying, doesn't it?
Yeah, it's a bullish signal, especially short term.
And if you look at the technical indicators, ORC is trading above its 20-day and 50-day moving averages.
Okay, so that means good momentum, right? But
for those who don't know moving averages, can you tell us what they mean? Like, how do those numbers matter?
Sure. Moving averages, they smooth out the price changes over time, give you a better sense of the trend. So when a stock is trading above those short-term averages, like the 20-day and the 50-day, it usually means things are going up. But ORC is still trading below its 200-day moving average. That's a longer-term indicator.
So that longer-term average could be saying maybe there's some pushback coming. So short-term is good, but long-term is maybe warning us, kind of a mixed bag.
Exactly. And then we have the relative strength index, or RSI, at 66.44, means ORC is close to being overbought.
Overbought, meaning the price might drop soon, like a correction. What could cause that?
Sometimes stock prices go up too fast, like they get ahead of themselves. RSI measures momentum. When it's overbought, it usually means the buying is slowing down, investors start taking profits, and the price dips also. The stochastic oscillator is saying the same thing, overbought. Short term.
Wow. 2 indicators saying things are maybe too hot right now. Definitely something to watch. But you mentioned another indicator, MACD. What's that one saying?
Yeah. The MACD oscillator is positive at 0.14. Supports the idea that the momentum is still going strong.
Okay. So some indicators are saying slow down. Others are saying keep going. That's got to be confusing for investors. What advice would you give them?
Well, it all comes down to your goals and how much risk you're willing to take. Short-term trade or long-term investment, those indicators can help. But you also need to think about ORC's fundamentals and what the whole market is doing.
True. Can't just rely on technical stuff. So let's look at those other factors. ORC just had their fourth quarter earnings, 2024. Net income of $5.6 million, or 7 cents a share. That's less than last year, though, huh?
Yeah. Part of that's because of high interest rates and some problems with agency RMBS.
Hold on. For anyone who doesn't know, what is agency RMBS? What does it matter to ORC?
Okay. Agency RMBS are basically bundles of mortgages, packaged together and sold off. The agency part means they're backed by the government, like Fannie Mae and Freddie Mac. So they're pretty safe compared to other mortgage investments. And ORC has a lot of agency RMBS in their portfolio. So when that market isn't doing well, it affects their earnings.
Gotcha. Makes sense. So even though their earnings were down, they still got a 0.6% return that quarter. How they manage that?
Dividends. They helped balance out the drop in book value. Shows ORC is still trying to give value to shareholders, even when times are tough.
And speaking of dividends, that's a big reason people invest in ORC, those monthly payouts.
Yeah.
But with earnings down, can they keep doing that? A lot of folks are wondering about that.
Definitely a good question. We'll talk more about that later. For now, let's focus on their full year performance. 2024, total return of 4.73%, huge jump from negative 8.63% in 2023.
Yeah, that's pretty impressive, especially with last year being so rough. ORC seems to be handling it well. As of February 1st, 2025, stocks at $8.04, right in their 52-week range. $7.41 to $9.08. It's moved up and down.
Yeah, and the forecasts for the rest of the year, they're all over the place.
Really? What are the experts saying?
Well, some short-term predictions see it going up to $8.39 by February 22nd, but end of 2025, they're saying anywhere from $3.01 to $5.11.
Wow, that's a huge difference. What do you think that means?
It shows how much uncertainty there is around ORC and the whole market. There's a lot affecting those predictions. Interest rates, inflation, even global politics. It's hard to know for sure where things will go.
Sounds like trying to predict ORC is like reading tea leaves.
Kind of, but that's what makes investing exciting.
So, what are the important things for investors to think about with ORC? We've covered a lot. What are the key takeaways?
Well, the monthly dividend is great, especially for people who want income. But you have to remember, Interest rates really affect how ORC performs. As interest rates go up, the value of their bonds goes down, and they have a lot of bonds. So those interest rates matter a lot.
So anyone thinking about investing in ORC needs to know where interest rates are going. If rates are going up, maybe ORC isn't the best choice. But if rates are going down,
That could be a good time to buy. It's all about timing the market
yeah,
and understanding how those things work. And speaking of timing, we should talk about how ORC manages their investments. You mentioned their barbell strategy before.
yeah. You said they have an up in coupon bias. What does that mean, and how does it fit into the barbell?
Up in coupon means mortgage-backed securities. With higher interest rates, ORC chooses these for their barbell approach.
Okay, so imagine a barbell. One side is those high coupon securities, hoping for bigger returns. What's on the other side?
The other side is low leverage, basically. Leverage means using borrowed money to try to get bigger returns.
So they're trying to find a balance.
Right.
Big returns on one side, low risk on the other, by not borrowing too much, like walking a tightrope.
Yeah, it's about balance. They have to make smart choices and manage risk well.
So the question is, can this barbell strategy work long term, especially now?
Well, it's worked for them before, when the market was shaky. But things are so uncertain now, it's hard to say if it'll keep working.
Right. And the long-term forecasts for ORC are all over the map. Some are good, some are not so good.
Yeah. It just shows how hard it is to predict what ORC will do. So many things could happen. Interest rates, housing market.
Okay, so let's talk about the whole market. We've talked about ORC's numbers
Yeah,
and how they invest, but how could the whole economy affect them?
that's a good point. If the economy stays strong and the housing market is good, ORC could do well. But if there's a recession, things could be tough for them.
So for listeners thinking about ORC, what should they keep in mind?
Most important, understand their business model and how interest rates affect it. If you think rates are going down, ORC could be a good investment. But if you think rates are going up, be careful.
Don't forget that monthly dividend. It's good, but is it sustainable, especially with earnings down?
Exactly. Watch their earnings reports and what they say about their dividend policy.
So we've covered a lot about ORC, their performance, their indicators, their earnings, how they invest, and what the market might do. Pretty thorough.
Yeah. We've looked at a lot. Hopefully listeners understand ORC better now.
No, it's up to you. Use this information to make your own decisions. Think about your goals and your risk tolerance. Do your research. Talk to a financial advisor. Remember, investing is a marathon, not a sprint.
That's right. Always more to learn. Staying informed is key.
Speaking of staying informed, subscribe to the Investing Talk podcast. Don't miss any episodes. We'll keep breaking down these complicated topics.
We love hearing from you. If you have thoughts about ORC or other topics, leave a comment below. Let's chat.
And share this episode with anyone who might want to learn about investing. Until next time, happy investing.
Yeah, they can have a big impact.
So you really need to know where rates are going if you're thinking about ORC. Rising rates, maybe not so good. But if rates are going down,
It could be a great opportunity. It's all about timing and understanding the dynamics. And speaking of how ORC manages their investments, you mentioned their barbell strategy earlier.
right, you said they have an up in coupon bias. Can you explain that a bit more? What does that mean? How does it fit with the barbell strategy?
So up in coupon means they're focused on mortgage-backed securities that have higher interest rates. It's part of their barbell approach.
Okay, so like a barbell with weights on each end. One side is those high coupon securities for potentially higher returns. What's on the other side?
On the other side, they try to keep leverage low. Leverage basically means using borrowed money to try to get bigger returns.
So they're trying to balance things out.
Right.
Big returns on one side, low risk on the other. By keeping borrowing in check,
Exactly. It's a balancing act. It depends on ORC making good investment choices and managing risk well.
so can this strategy work long term with everything going on in the market?
Well, it has worked for them in the past, especially when the market was volatile. But it's hard to say for sure with the current economic uncertainty.
Right. And those long-term forecasts for ORC, they're not very clear.
Yeah. Those different predictions, they just show how hard it is to predict what ORC will do. There are so many factors. Interest rates, the housing market.
So let's talk about those broader market factors. We've talked about ORC's financials and their strategy. But how could the overall economic outlook affect them?
That's an important question. If the economy stays strong and the housing market stays healthy, ORC is probably in a good spot. But if we have a downturn, things could get more difficult.
So for our listeners who are considering ORC or just starting to research it, what are the key takeaways?
I think the most important thing, is to really understand their business and how interest rates impact it. If you think rates are going down, ORC could be a very attractive opportunity. But if you think rates are going up, you might want to be a little more cautious.
And of course, we can't forget that monthly dividend is a big draw, but investors need to consider if it's sustainable, especially with earnings down recently.
Absolutely. Pay close attention to their earnings reports and anything they say about their dividend policy.
So to wrap things up, we've covered a lot about ORC today, their recent performance, technical indicators, earnings, their portfolio strategy, and even the broader market outlook. It's been a pretty comprehensive overview.
It has. We've explored a lot. And hopefully your listeners have a better understanding now.
Now, it's up to our listeners to take this information and make their own informed decisions based on their own goals and their own risk tolerance. Always do your own research. Maybe talk to a financial advisor. And remember, investing is a journey, not a sprint.
Well said. There's always more to learn. And staying informed is really important.
Speaking of staying informed, make sure you subscribe to the Investing Talk podcast. You won't miss any future episodes where we break down these complex topics and explore the market.
I always love to hear from you. So if you have any thoughts about ORC or any other investment topics, leave a comment below. We love to keep the conversation going.
And don't forget to share this episode with your friends, family, colleagues, anyone who might be interested in learning more about investing and might find this discussion about Orchid Island Capital helpful.
Until next time, happy investing, everyone.
So the big question, hold or fold? Orchid Island Capital, ticker symbol ORC. Not an easy answer.
No, lots to think about. On the one hand, that monthly dividend, history of doing well in a tough market, and their unique portfolio strategy.
Will that dividend last? Interest rates could change quickly, and those long-term forecasts, they're all over the place.
Yeah, weighing the good against the bad. Ultimately, it's your decision based on your goals and your risk tolerance.
We've given you the information, the data, the trends, different viewpoints. Now it's up to you.
Right. Investing is personal. What works for one person might not work for another. Do your research. Think about your finances. And if you're not sure, talk to a financial advisor.
We hope this episode helped you understand Orchid Island Capital and gave you some things to think about. Remember, knowledge is power, especially when it comes to money.
I agree. The more you know, the better decisions you can make.
And that's what the Investing Talk podcast is all about, helping you become better investors.
So, subscribe to the show, share this episode with others, and leave a comment below. Tell us what you think about ORC. Hold or fold.
Until next time, happy investing, everyone.